The market is getting ready to take in the monthly employment report out of the US, though we wonder how much impact the release will ultimately have on volatility in the aftermath of this week's comments from the Fed chair. Overall, the headline numbers have been screaming for higher rates for years now, though with inflation subdued and the global economy still facing worrying uncertainties, the jobs report just hasn't meant all that much. We have seen a deterioration in payrolls this year, though again, where we're at is still a place that on its own would justify higher rates. So with Powell coming out this week and saying it would take a material reassessment of the Fed's outlook for the US economy to cut interest rates again, and a significant rise in inflation to start raising rates again, it would seem that whatever the data produces today, be it on the headline NFP print or in the inflation correlated average hourly earnings, it won't really make much of a difference when it comes to pricing the Fed's rate path. Of course, at the same time, Fed forward guidance hasn't been all that reliable, to say the least. And with this knocking credibility, the market might not really care about Powell's words, instead reacting as it sees fit. The dollar has come under clear pressure post Wednesday's Fed decision, and this downside pressure could continue if the overall read of the data produces a dovish feel. At the same time, given the influence of politics on financial markets in the current climate, the dollar is capable of being at risk even on a stronger set of data, with the market worried about soft dollar trade policy from the US administration. Technically speaking, there is certainly evidence of the dollar topping out on a medium to potentially longer-term basis, and it will be interesting to see if this proves to be the case. So what is the market looking for in today's report? NFPs are forecast to come in at 89K versus 136K previous. The unemployment rate is expected to tick up to 3.6% from 3.5% previous, and average hourly earnings are projected to move up month on month and year over year to 0.3% and 3% from 0% and 2.9% respectively. Technically speaking, key levels to watch in euro-dollar above and below come in at 112.50 and 110.70 respectively. A weekly close above or below would likely influence the next big move, either to the top side or downside. That's all for now.